Hello and welcome to this webinar, The Blind Spot in Enterprise Security, Managing Workforce Risk Post-Hire. This event, brought to you by Security Magazine, is sponsored by Post-Hire. I'm Jordan Elger, Managing Editor at Security Magazine, and I'll be your moderator today. Thank you for joining us. Our presenters today are Peter Collins, Chief Revenue Officer at Post-Hire, and Francis D'Addario, Emeritus Faculty Lead for Strategic Innovation for the Security Executive Council. Before we get started, please take a moment to scroll down and explore the webinar console. You can download handouts, click on the speaker images to view their bios, and submit your questions or comments anytime using the Q&A box. We'll address as many as possible at the end. Throughout the webinar, you will also be asked a series of polling questions on your screen. We'd love to hear your responses so we can get a better understanding of our audience. Today's webinar is being recorded and will be archived on securitymagazine.com. And now I'm pleased to turn it over to Peter and Francis to kick us off.
Thanks, Jordan. Appreciate it. And thanks to everyone for joining. I wanted to start the conversation off with a simple observation, something we see consistently across organizations of all sizes. Security has evolved dramatically in every aspect except for workforce risk. When you really think about it, companies invest today in cybersecurity, data protection, infrastructure, AI-driven threat protection. There's a real focused commitment in all of these efforts, but when it comes to the people inside the organization, the approach is still largely static. We screen it higher, we make a decision, and then we move on. And the assumption typically from that point forward is, we made a solid hire and we're done. But is that really true? The reality is people change, circumstances change, risk changes, and that's the blind spot we want to address today. I don't have all the answers. So I'm joined by Francis D'Addario, who brings a wealth of experience to this and pretty much all security topics. In his role as CSO and with Security Executive Council, he's worked with security leaders around the world and seen firsthand how organizations actually deal with this, not just in theory, but in practice. So what I'll do today is walk through what we're seeing, note where the gaps are, and then have Francis share his perspective along with real world examples of what this looks like. Francis, did you want to say a few words?
Hi, Peter. Good to see you again. Francis D'Addario here. I joined the Security Executive Council in 2009, and I had the privilege of serving multiple brands that were multinational prior to that, including Starbucks coffee, 7-Eleven stores, etc. So what we'll do is lace some of the research, experience, and other observations for your insights that you can share with leadership. Thanks, Peter.
Sure. If you guys don't mind, this is our first poll that we'd like you to take. So I'll pause for about 30 seconds. And you'll see the poll right there.
What we'll try to do is share poll results with you because we firmly believe in collective knowledge. Peter and I have been there, as you can tell from our appearances, but we've worked with some fairly great cross-functional and diverse teams. And those team members include researchers. So we find that adding to the collective knowledge is a conspicuous opportunity.
So obviously you guys can see we're sharing the results with you. Pre-employment screening only 10, but 45% of you guys responded. So let's move forward. Slide 2. I want to take a look at why the blind spot really matters and where it starts to impact your organization. Most of the time when people think about workforce risk, they jump straight to the extremes, bad actors, one-off events, going postal. But surprisingly, most of the impact and hurt actually comes in the form of everyday behavior. Organizations do take big hits occasionally, but the daily drip of constant hits adds up. As you can see from this slide, they add up to over $2 billion of losses per day, and that's directly tied to workplace misconduct and disruptive behavior. Also interesting to note that 56% of insider incidents are linked to negligence, not intent. What that really means is most of the risk inside an organization isn't coming from someone initially setting out to do harm. It just kind of happens. It's coming from folks making poor decisions, being under pressure, or just letting things slide. And ironically, 67% of employees admit to some form of theft over time. So this isn't just about bad people. It's about things happening both inside and outside the office that changes one's motivation, or in some cases, their ability to do the job. It's about judgment lapses. It's about pressures, both internal and external. It's about their environment in and out of the office, and quite frankly, access, as they have access to many things they never used to have access to. If you look at the right side of the slide, you can see where the disconnect really shows up. Most organizations do screening once, at a hire, and that seems to translate to a final decision on whether to trust or not. Why? Because it isn't revisited. Risk, however, is not tied to a timeline. It evolves continuously. Someone goes through financial stress, they become involved in a legal issue, their behavior starts to change, outside pressures increase, all of which you can't see if you don't have access. If you compare the investment that organizations make as they relate to risk, they build incredibly strong defenses to prevent external threats, while the most consistent and obvious risk, a trusted insider, isn't front of mind. Here's the crazy part. It's not that companies don't care about workforce integrity, it's that they assume the hiring process solved it. Hiring, as I've said, is a snapshot, and risk becomes an even more of a moving target. That gap between a one-time decision and a continuously changing reality, well, that's exactly where organizations are vulnerable. So, Francis, from your experience, when organizations start to recognize the gap, what triggers the realization? Is it proactive, or is it usually driven by an incident?
Good question, Peter. I think it's typically driven by an incident. Often, organizations will think that prior to an event that they're not bulletproof, but loss resistant. I found that to be absolutely clear when I interviewed with leadership at Starbucks Coffee Company, and that was way back in 1997. And at that time, people thought that a commercial robbery homicide would never happen in their environment, particularly Starbucks, because the culture was one of care, of unconditional love. People lined up outside at that time for blocks when there was an opening. And those just weren't things that were contemplated for organizations that are building brand. But what we found from the numbers that you've gone through and others that things happen. It happened to Starbucks shortly after I interviewed for that job, which I thought I lost. And I mentioned that commercial armed robbery homicide was their number one risk because we had done such a great job at 7-Eleven and convenience and quick service food to really lower the numbers of frequency and severity. And when I said that, everybody in the room folded their arms, and which, as you know, is an indication that you've just lost your audience. So what happened is I had an opportunity to go around the room and talk about how risk is defined by every end user for supply chain, for human resources, for finance, et cetera. And as you know, and as everybody on the phone knows, we have regulatory expectations that drive our perception of risk and what we do about it. In the range of cultures is everything from cultures that care to people that are purely compliance driven. But the secret sauce is that compliance requires a certain duty of care. And it begins and it ends with integrity assurance. So if we have the right people show the customer the right love. We have the things that show up in the literature and the research, including the $2 billion a day losses due to incivility that is outlined on the first slide, we have knowledge that drives turnover. It drives churn of talent. It drives churn of customers, et cetera, et cetera. And more often than not, it results in those calamities that can happen. Shortly after my contemplation of a Starbucks offer, back in 1997, we had a triple homicide in Georgetown, which is a part of DC, which is a relatively calm area. And the implicit and explicit repercussions of that event drove everyone to phenomenal reaction. And unfortunately, we were in a place, because that had happened, of really having a research lab for a total portfolio of protection, which we brought forward to the point that we were actually making $12 million after cost of all loss and after all of our investment in protection per year. That went up to $24 million per year after all of that cost and loss. So people will either know it up front and build for it, or they will define a program because of it.
Thank you, Francis. If you guys don't mind, I'd like to pull up another polling question. If you could take 30 seconds or so and respond to that, that'd be great.
There's also, Peter, other than the numbers that we've shown, there's decades of research by organizations like the Gallup organization that have shown us that employee customer care drives the consensus that the brand cares about people, and people care drives the capability to drive bottom line, to curtail losses, the frequency and severity, et cetera. So there's a lot of research that we'll share with the audience if they care to connect with us on LinkedIn or show some interest in the polling that we have here to drive programming.
Thanks. I guess you guys can see the next slide with the results from the polling question. What's your top worst concern? Thanks for sharing those insights. They're pretty standard as from a percentage perspective of what I've seen, at least in my experience. I imagine they're similar to what you've seen, Francis.
Yeah, I think so. And, as we as you get into some of the research and want to satisfy your customers and your leadership, you'll find that the opportunity to mention the sources, including the Security Executive Council, Forbes, republishing some of our research, Wall Street Journal, et cetera, are pretty viable for persuading others to what the opportunity is.
So moving along, as we look at, I guess, that top line, insider threat negligence being the top percentage winner for what folks are interested in seeing, looking at our next slide, if we agree, as Francis outlined previously in the last slide, that the problem was real, really the next question becomes, how do you actually think about acting on workforce quality assurance? And quite frankly, this is where most organizations get stuck. What we found is the issue isn't just capability, it's framing.
Everything begins and ends with workforce integrity. And, by the way, that includes your contractors. That includes the employees. That may even include the visitors. As you know, if you visit Microsoft or others, they do integrity screening before you ever arrive at their door. And the reasons for that are obvious to some of us. and less obvious to others. So you have to remember that leaders build brands, and they have the opportunity of making certain that they are taking care of the business each and every day, from hiring and employment and other things that are available, but they don't yet know the nuance of, I have to check up that person to make sure that they're viable, to make sure that if they are on a HIPAA declared mental illness and they're taking medication, I have to look for behavioral indicators that might give me an idea that they're off of that medication. And you'll see that in stops for DWI, and you'll see that in other things are repetitive conduct for what's going on with that person within the organization. Those instances of crime, of accidents, of other casualty claims, including fraud and embezzlement, drive the cost of doing business. And your ability to mitigate those instances drive bottom line. For nonprofit organizations, if you belong to a nonprofit, it drives mission fulfillment. So it's pretty easy to understand that my net cost of ownership for all the things I might do for the organization or for the brand pay off. And in our experience, they pay off 4 to 10 to 1. So that's important to keep in mind as you're setting up the business case, which is a proven practice that others have done, that you'll be able to put together as a leadership opportunity for brand.
So my system has booted back up. Thank you, Francis.
You're welcome.
What I was starting to say was, I think we all agree the problem is real. And what we found isn't really an organization's willingness to move forward with it. It's the framing of it. Most companies still think in terms of, we screen people before we hire them because that's the way it's always been. But when you really step back and you look at every other critical part of the business is managed differently. We don't just QA a product once and assume it's fine forever. We don't just look and audit financials one time and move on. If we look at monitoring systems at deployment, we don't do that just once, we do it continuously. So most every other aspect is validated continuously, except for workforce risk. And that's where the shift really becomes important. As you can see from this slide, that gets broken down to 3 core elements. Visibility: do you actually have ongoing awareness into what's changing inside your workforce? Just not assumptions, actual visibility. Because without that, everything else you're just reacting to. The second is context. Once you have those signals, can you interpret them correctly? Not every event matters. You don't need to take action on everything, but some absolutely impact one's ability to do their job, whether it's directly or indirectly, it impacts them. And third is governance. And this is where things tend to break down. Even when organizations do see something, they haven't created a consistent way to respond. So not everybody handles everything the same. Different teams handle things differently. Decisions that get delayed and sometimes completely ignored. So what I wanted to do is draw your attention to the visual on the right. And this is why the conversation matters across business units. Workforce integrity touches each one of these spokes: cybersecurity, HR, compliance, operations, and most importantly, in some cases, brand reputation. It's not owned by any one function, it's shared, which is why it often falls through the cracks. So that said, Francis, this is where I'd love your take. When organizations try to move toward this model, where do they struggle most? Is it the visibility? Is it interpreting what they see? Or is it actually acting on it?
Well, it's a question of the awareness, I think, up front. So what are the constraints? What are the dollar signs? What is the threat to mission? What is the threat to bottom line profitability for profitable organizations? So the question becomes, in many cases, what is the return on investment of the protection? And as we know, the the cost can sometimes be as low as a high dollar cup of coffee with all of your ads and needs. In many cases, the opportunity to demonstrate return on investment is there. We see the high dollar numbers of what the general cost is globally. But my recommendation is to take a look at your own losses, at your own insurance claims, at your own P&Ls to see what is being determined as a casualty loss, a shortage of cash, a shortage of inventory, et cetera, et cetera. All of those pieces and parts add up to hundreds of millions of dollars for large organizations and millions of dollars for smaller organizations. If I get injured because someone was stalking me and they've evidenced stalking behavior in the past, and I've been determined to be criminally negligent, I've got a big problem. Not only do I have a big problem, but I have a $7 million injury that is now on my insurance workers' compensation line that's problematic. When we first went after armed robbery at 7-Eleven stores, it wasn't necessarily because we automatically loved and cared for all of our employees. We were concerned about losing our workers' compensation insurance in the state of Texas, which is where, by the way, we were home headquartered. That's where our flag flew. That would have been a real problem because 24/7 convenience would have been not have been an opportunity had we had that ongoing problem. When we mitigated it with lower shelving and crime prevention through environmental design measures, that meant about $200 million to the bottom line. So the protection programs began to pay for themselves, and they accrued additional bottom line profitability because they featured return on investment. Those are music to leadership's ears in a place where we know that the risks to the brand are ever present now. And we have things going on that, including supply chain interruptions that are 34% higher than the measurements last year. And by the way, that was before the most recent Middle East war. So the question remains, how do I protect? How do I care? And how do I show that from a net profitability point of view, I'm actually contributing? That's the opportunity for all of us.
And really, we're obviously trying to point out through this discussion how that impacts or where that impact comes from when you're looking at workforce risk, and really the gap that's been created in having folks actually or organizations not take the time and devote the money to really looking at an individual after they're hired. So that said, yeah.
And Peter, I think your original statement about this being a cross-functional team effort is spot on. We've seen MD Anderson, Cancer Research Institute, and others take this on in a way where they were able to explicitly talk about the risk in every single one of their departments and talk about the need for everyone being at the table from a cross-functional risk mitigation point of view. And they were able to get the attention of operations, medical operations. They were able to get the attention of human resources, of finance, of everyone to prove that they said who they were. And that was an opportunity that had consequences that broadly served their community for cancer research and a cure for cancer.
So that said, let's move on to our next polling question. I believe this is the last one. I'll give you guys 30 seconds or so to complete that. So we can see the results. So the confidence levels of detecting workforce risk afterwards. Obviously, there's 30% that's neutral, 32% that's somewhat confident. Love to hear how you're doing that. Maybe we can help, maybe we can't, but I imagine we can. So moving on to the next slide. Really, it's our closing slide. And really, it's kind of a call to action, but I'd like to just kind of put one question out there because it tends to frame the conversation we've been having. But when was the last time you actually quality checked your workforce? And obviously, this ties back to your confidence in detecting workforce risk. Have you done it recently? As I've stated a few times in this discussion, it typically happens at hire and doesn't happen again. Some organizations have moved to rescreening, which is helpful, but that's typically annual. And there's a lot that happens within that year that is not covered in a rescreen because you're relying on the same background screening products, techniques, databases that you originally screened someone with, and it's not typically up to date as much as it can. But I think you know why I asked the question, because most organizations don't have visibility there. It's not because they don't care, it's because they actually don't have a way to see it. Some organizations have folks that scour police reports and papers and things like that to try and find this, but there is an easier way to make that happen. If you're curious about what your workforce looks like and what has transpired, we do offer a free population assessment that assesses workforce risk. And what it is, it's a 90-day look back at no cost. And we look at what events we would have found across the country and for any arrests or criminal type activities. And we share those results with you. There's no disruption to the process. It's not an arduous thing in any way. There's no heavy lift on your end. It's just basically give us a list of folks. We look back over 90 days and share with you what we would have found. But it does give you clarity on what has showed up. It gives you clarity on what you may have missed if you have any internal systems or processes to try and find that information today. And you also get a feel for how often it's happening. The feedback we typically get on those reports is one of surprise because they don't realize how much has transpired and what does happen within a workforce. So what I would encourage you to do is treat your workforce integrity like every other critical system in your business continuously. Look at it all the time, not just once. So in closing, Francis, I'd be curious before we open it up to questions, what advice would you give organizations that are just starting to think about workforce risk in this way?
Well, Peter, I think if you think about who were the possible governors of your organization, which we sort of asked and answered on the last slide, is what's in it for me? What's in it for every single individual? If I have a security contractor who is bipolar, is under treatment, is under all of the paranoid delusions that without medication they might otherwise handle, and they're off of their medication, and they commit a crime or a violent crime while they're wearing the uniform of a contractor, it's not going to be stipulated that that was a contract agency officer. It's going to be stipulated that the brand had a security officer that went off of the reservation and did harm. And that is a tragic brand reputation harm. So the opportunity of being able to find out that even if you are contracting all of your services outside, that your consultants, your contractors, and others can be subject to the type of validation that Peter is talking about. The integrity assurance can happen for free in organizations. Now, the question is, if you have a free capability to check it and you don't do it, am I negligent? And that's for a jury to answer we won't answer that here. But you can decide for yourself that if you want to protect your own personal brand, that you have done everything possible to make sure that contractors, employees, anybody that has access to systems or physical premises in the Active Directory is subject to persistent integrity assurance. That is an opportunity extraordinaire that we didn't have in my day, quite frankly, because if we did, I wouldn't even do pre-employment today. I would do post-employment integrity verification and really cut the losses, the cost, in the speed to making the determination that one, I had found the right person in my screening processes. I double checked that. I signed them up for persistent integrity assurance. And by the way, I am going to show from now on what the results were on claims to my leadership going forward. That's an opportunity of not only demonstrating care, it's an opportunity to demonstrating contribution to bottom line after cost. Peter?
I guess we can open up the questions. Toss it back to you, Jordan.
Thank you both for a great presentation. We've received several great questions throughout the program, so we'll go ahead and jump right in. The first question that we have is, how do you quantify the cost of a bad hire today?
I'll leave that one to you, Francis.
Well, I'd qualify it by what my total cost of experience was with that particular employee, that particular contractor, that particular visitor. Did they, in fact, harm me in any way? You know, you can go from insider risk to theft of secrets to trade secrets, that is, and all of the other things that are involved in it. You can go to, you know, the fact that somebody had health issues that walked into your state of business and disrupted it. We saw that with COVID, certainly. And COVID opened up our eyes to many of the things that we're talking about here. But the opportunity in the United States to really take a plausible idea around making certain that people are who they say they are, that they're healthy and well coming into our offices and our places, our facilities, or our systems, and that they civilly treat people with a note of respect. One of the things that I would do today, if I was influencing leadership around access, is I would require not only the persistent integrity opportunities up front to make sure that everyone was who they said they were and posed no threat, but I would also let everybody know that our premises require civil and dignified conduct. And that's a requirement for access. And if you operate or behave in a manner that makes people afraid, you're going to be removed from those premises. It is going to end, or at least put in suspension or within investigative mode, your ability to have access to our facilities or systems again. That is proactive. That is anticipating the risk. That is really taking a look at differentiating brands that have a culture of care.
Fantastic. Thank you. Another question that came in during the presentation: how does a company protect itself when HIPAA laws prevent sharing information about mental health?
That's interesting because what the HIPAA laws don't necessarily contemplate fully is the behavior that results So it's not necessary to break HIPAA laws to do what we're talking about doing. What you're acting on is misbehavior. And misbehavior may be construed depending on what you are looking for any of the protected sorts of classes, including HIPAA protections. So you don't have to go to a HIPAA violation in order to do what we're talking about. What you have to do is demonstrate that you fully understand that employee care is very important, that cared for employees take care of customers, cared for contractors take care of customers, and that drives the organization to prosperity. Peter, have you got anything to add there?
Actually, I don't. There are limitations. There are very few limitations around ongoing screening of employees, but really it's just based on making it a safer environment. The information that's shared typically, I'm not sure what perspective the question was asked from as far as sharing information, where it would be shared. But this is all information, at least that we're talking about when we're talking about workforce risk as we presented it today, is really to make sure that the people remain in good standing and maintain the integrity with which you hired them. So I'm not sure where HIPAA really flows into that from a workforce risk perspective.
Well, perfect. Thank you. Another question that came in. What would need to change for your organization to shift from reactive to proactive?
Really, from my perspective, it's just implementing a program that allows you to see what your employees are up to outside of the workplace, and in some cases inside of the workplace. That allows you to assess the risk that they represent or don't represent in completing their job responsibility.
Francis, I think the switch is ongoing, right? Everybody loves change in this audience, I'm sure. And we haven't seen much of it lately. But the question is, how do I save time? How do I cut costs? How do I ensure that I have a rising capability that shows results, that there is mission assurance or profitability assurance going down the line? And the only way that you're going to see period over period, year over year, net contribution is to explore those innovations. So, a post-hire is simply or not simply, they actually had to jump through some hoops to be a qualified solution innovation provider for the Security Executive Council. We take that very seriously. And the ability to make sure that they are who they say they are and they do what they say they do is all important to us. And we'll make sure that that message gets conveyed in a way that is brand healthy. Employers do care about the wellness of their contractors and their employees and their visitors and everybody else. That goes without saying. The question is, what is the best way to care that has the best results?
Fantastic. Thank you. Another question that came in. How challenging is it to quality check your workforce when a business or the business itself is sort of stuck in these rigid business silos? How can organizations overcome this?
From my perspective, it's not difficult to check. The tools are there, but how willing is the organization to make that step forward to look at it that way? As Francis mentioned in one of his responses earlier, it costs less than a cup of coffee to monitor an individual or screen an individual ongoing 24 hours a day It costs less than a cup of coffee per month to screen that person. Is that limited cost worth the step and the budget commitment to make that happen? To me, it's an easy question to answer. As I mentioned earlier in the discussion, you look at all the different systems and all of the processes and safeguards that you put in place and investments you make into monitoring cybersecurity and what we're doing against AI and all those other threats you're throwing a lot of money at, when really the individual that is sitting behind a desk may be the worst threat you have in you, putting the company at risk.
And I would add to that, Peter, that the opportunity to really do an enterprise security risk alignment means talking to your customers and talking to your leadership in a way that they understand what risk is. And it's all hazards risk. It's not necessarily just security risk. It's health risk. It's financial risk. It's all of the things that we mentioned. By the way, we have a practice that's called enterprise security risk alignment that we do with many corporations, where we take their 10K, which is an SEC, the big SEC, not the little SEC, like the Security Executive Council. The Securities and Exchange Commission requires by law that anybody that trades has to divulge their risks to the public. And what we do is we look to see whether or not the folks that are responsible from a leadership point of view have taken a look at the risk that is stated in their SEC 10K report, which is usually found in the annual report. Who owns the risk mitigation? What tools that are they currently employing for that risk mitigation, and what the outcomes are? And when you do that, if you're less sophisticated and you're less capable and less mature, we can show you how to do that. And most of that is information is on publicly facing web pages and free.
Well, perfect. Thank you. Another question that actually just came in: why do most enterprise security frameworks focus heavily on pre-hire vetting, but quote unquote go dark once an employee is onboarded?
Because pre-hiring vetting is required by FCRA standards, which is a regulatory requirement, but it hasn't yet been differentiated from a value point of view for post-hire or persistent types of vetting. Peter, that's your area of expertise.
That kind of sums it up. Organizations, there are a lot of reasons. One, as I kind of alluded to in my last response, is budget. Companies don't want to put that extra money out to actually monitor or rescreen. When you look at, I guess what we do is we're looking at on a daily basis at every individual that you have and comparing the results that we receive from courts across the country. Over 200,000 new and updated records per day. We're filtering over those rosters of our clients, and we're matching an individual to an event. That's actually a lot less expensive than a rescreen. So looking at them on a daily basis versus a rescreen or just doing a background check once and saying they're good, the cost is really inconsequential. But organizations, in a lot of cases, screening goes through HR. And my understanding, and speaking to many, many, many HR professionals, is they feel that this is another nuisance to them. And
well, it's not only a nuisance. I would add the fact that it's the total cost of those events, Peter, is when that person that might otherwise been found in an integrity assurance check has caused a loss to the organization, or has an illness, or has misprescribed the way they treat customers or others, or they've mistreated the brand, embezzlement, insider issues, those sorts of things. So the issue becomes, what is the total cost? What's the total cost of ownership for the prescribed mitigation? What is the total loss that you can find in casualty claims? And by the way, a lot of the casualty claims are now outsourced to organizations that manage those. So they're harder to get than they used to be in the old days, but they're gettable. And the cost of putting the people that are ill, injured, have accidents, are victims of crime, et cetera, is a multi-million-dollar opportunity proposition when it's properly mitigated. That all starts with contractor, employee, visitor risk mitigation.
I think also in a lot of cases, organizations don't know how easy it is to really implement a program like this. It's very simple.
True.
Well, awesome. Thank you. Another question. How are organizations practically implementing continuous workforce monitoring today? Who typically owns it within the organization?
It seems to be driven more through security than HR. I think security understands the risks. HR sees it as work, but once they...
Yeah, and I think it goes back to the opportunity, Jordan, when you have the opportunity to look at what the risk is in its totality to brand, it becomes consequential. So where I might not yet, and that goes back to our conversation about, do people anticipate this? Do they look for the regulatory implications? It's clear in my estimation that persistent integrity assurance will be required by government and others along the way. So the question is, can we look at our Active Directory today and authenticate it? And that's easily done, because what I may get back a report from Peter's organization that says, I have 4 vice presidents that had issues with law enforcement agencies over the past 3 years since their date of hire. I have 15 directors. I have 21 senior managers. And I would ask the cross-functional team that is responsible for governance, is that important to us to know more? And the answer is typically going to be, hell yes. We need to know more about these instances, because if there is a way to mitigate them that I would call a proven practice, or many on the phone or the video conferencing would call a proven practice, that's an easy lead for leadership to follow. So, the fact that we can take an Active Directory and take a look at our previous hygiene and have others tell us whether or not our current providers are doing a good or great job is okay, because that's what's expected by us from our stakeholders, our investors, our people that want to cure cancer. That is something that makes sense. I'll bring up Delta Airlines for a moment. Delta, as everybody knows, is their North Compass is employee safety and customer safety in particular. And they tell you that every time you buckle up on a Delta airframe. And they shared $1.3 billion with their with their employees last year in a profit sharing scheme that was likely driven by health, safety, and security mitigation practices. So we can't take a look at seeing who the most successful brands are without taking a look at the total cost of loss and related items, and really determining what the net contribution is.
Excellent. Thank you. Another question that just came in, what is the single most common red flag that organizations overlook in long-tenured employees who eventually become security risks?
I think the answer is in the question. I think companies, when they see someone who has a long tenure, they tend to believe that they are some of the most consistent, most trustworthy folks that they have on board. So they don't look. They don't feel a need to look. And really, what we have seen through years of providing this service is that it doesn't matter how long you've been there. Life events change, people's attitudes change, motivations change, and people tend to fall out maybe later in life, maybe earlier, from those integrity standards with which they were hired. So it's not really looking at someone who's just come on board or been on board for less than 5 years. It's looking at the entire organization, because they all have the same propensity to step out of line, given the right circumstances.
And I would add to that one that it depends on your adjudication and your arbitration processes, right? So, if I have someone that offended that 20 years ago, I mean, I had a case where a situation where someone was convicted of manslaughter. That was knocked down from a first-degree homicide, which had some conspicuous intent. That person served 15 years, but they were protecting their little brother from a gang. And they had gone through the organization. They had been promoted 5 times. They conspicuously rose all the way to, you would throw that out just on merit in an arbitration situation. So there's going to be exceptions to the rule where people that have seen to have done bad things have a record. But because of the brand values, you are going to want to let them correct the record, and you are going to want to keep them for further accomplishments.
Perfect. Thank you. This might be our last question, depending on timing. So I'll ask it right now. Are companies ethically and morally required to tell their workforce they will be consistently monitoring for mental health irregularities?
Mental health, I'm not really sure of that answer. But if you are screening individuals and looking at what type of history or events may have occurred recently, the ongoing screening does follow the same guidelines as a background check. You do need permission to do that. As far as the mental health, I'm not sure. Francis, you may have some insight on that.
Yeah, I'd say that you are conspicuously looking for misbehavior that is conspicuous. You're not looking for what the reasons are, which could be mental health. It could be because you've had a bad day. It could be because you just got news that your son or daughter was involved in an injury accident. There could be lots of information that comes out of a fact discovery or other things that would lead to an arbitration of that particular case. But those would not be conspicuously mental health situations. One of the things that we did at Starbucks in the early days is we used to get threatened all the time from people that were off of their medication that had confirmed mental illnesses that would seek a lawyer because they were barred for behavior, by the way, from our premises. And they would send us a 17-page diatribe by fax or 33-page diatribe by fax about how we deserved every heinous crime they could describe in 17 pages. And they were perfectly fine when they were on their medication. So, the fact finding is important. Investigators are still important. People who know risk in all of the subject matter expert categories, from human resources to security, safety, health, they're all important in this process. But what we have to do is evolve our maturity to include them when we're talking about risk.
Excellent, thank you. We actually have time for one more question. What are the most reliable digital indicators, for example, unusual data access patterns, credential sharing, etc., that a quote-unquote trusted employee is becoming a risk?
That's a good one. One of the things is I would talk about if your access control system, which includes your integrity assurance, by the way, up front, is capable of determining what dwell time is, you are going to find that people that have been authenticated, that have permission, that have the privilege of access to your service systems, to your facilities, etc., are there for unnecessary longer times. We found that out after 9/11, when we had conspicuous contractor delivery after hours of milk and coffee and other things necessary to run coffee shops. And what those contractors were doing they were looking to see whether the safe was open. They were looking to see whether or not money had been left in tills. They were looking to do other things, including taking $400 espresso machines at the time out of the store, other than just delivering what they were doing. So that had a happy ending for the profitability of the entire region of Manhattan and bottom line results, but only because we were checking access control systems, video, going back and rechecking the integrity of the people that we had working for us as best as we could. Much easier now.
Well, perfect. Thank you so much. That's all the time we have for questions today. Everyone, please thank me in joining Peter Collins and Francis Diodario for their presentation, as well as our sponsor, PostHire. If you have any additional questions, please email webinars@bnpmedia.com. We're happy to help. When you exit the webinar, you'll be taken to a brief post-event survey. We'd appreciate you taking a moment to share your feedback, as it helps us continue to improve our programs. Please visit securitymagazine.com for the archive of this presentation and information about our upcoming events. We appreciate your time and hope you have found this webinar to be a valuable experience.